Good morning, everyone. How's everybody doing? Can you type yes in the chat box on the right? Let's make sure that you can hear us, okay? Say yes, 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 yes. Awesome. Welcome, Lena, Christopher, Pauline, Corey, Julian, Mike, Todd, Francis, Dennis, Yolanda. I got some family members in here. Awesome. Evelyn. All right, who are my early risers? We got 54 people. We were staying steady around 200 people yesterday. Got Orlando in the house. I see ya. Got Cali folks in here. Awesome, awesome, awesome. Lee, good morning. I like your
Morning.
background.
Yeah,
Good
that's
morning,
Des Moines.
sir.
It's all Des Moines. Yeah, thanks, Des Moines.
Awesome. So it looks like we have Dave on as well. So we're gonna go ahead and get started in a minute. But before we do, let's give a chance for the stragglers to jump on. While we do that, I just want to go over some quick housekeeping things real quick and share some of the agenda for today. Real quick though, before we get started, yesterday was amazing. We had so many comments. In fact, there were so many. I went back to read some of them from last night just to get caught up on all the comments that were coming in. And it seems like you guys got amazing value from yesterday. And so what I want to do real quick is if you could do us a favor, type in the chat box, what was your biggest aha moment, your biggest takeaway, the biggest tip or idea that you got from yesterday's training and all the speakers that you're going to quickly implement into your business right away. I'd love for you to share that biggest, just big one aha, the biggest aha moment, tip, idea, or strategy that you got from yesterday's training that you're going to implement in your business. Please do us a favor and share that. I'd love to see the responses we get from that. Also, if you have not filled out the discovery forms, please do so. We want to make sure that we're custom tailoring the training for you today. In fact, I was on the phone this morning with Steven Morales and Chris Gomez specifically, tweaking some of their topics for today based on feedback from yesterday, especially for some of the newbies that are on this training. We want to make sure that we're catering to you as well. So I know yesterday was a lot of really high level content and information, and while some of the newbies could have gotten some stuff from that as well, specifically things you need to be doing right now, like revenue focus, staying lean, cutting expenses, and so forth, we want to make sure that we're giving some actionable plans for the newbies as well. So be sure, Steven Morales, Chris Gomez, they're going to be on later on today to help with that. The agenda for today, we're going to kick things off with the amazing, the great Mr. Dave Steck himself. The man is an absolute genius, a stud. This is one of Lee's mentors. Let me see if Dave is on real quick. Let's make sure he's on. Dave, you there? Let's see, Dave, you there?
I am. Can you hear me?
I can hear you.
All right.
You're coming in loud and clear. Where you Dave, I can't see your camera. I know all of us look homeless right now. We're probably, I haven't gotten a haircut. Nothing like damn near a month it seems.
Yeah, I literally showered before I got on here and actually did something with my hair. It's the first time I've shaved in a month. So I'm hoping I'm looking really good today. But anyway,
Is your camera on? I can't see you.
Yeah, hold on a second. Can you see me now?
There you go.
Yeah, baby.
That guy. Where are you?
Oh, where am I? I'm in Puerto Rico, man. I'm at home.
Oh, nice. We just came back from Puerto Rico like 3 weeks ago.
Really? All right, hold on. Does this look familiar?
It's awesome. Yep, looks familiar.
Nice. That's nice. Awesome. I'm missing Puerto Rico already. But happy to have you on, man. Appreciate you being here and joining us for today. You guys are going to get an amazing treat from Dave here in a minute. Let me just go through the agenda for today. So we're going to kick things off with Dave. We're also going to do some Q&A at the end with him. Then we're going to take a break and we're going to continue with Steven Morales. Steven Morales is one of our acquisition sales trainers. Amazing at what he does during these times of stay at home and working from home and virtual and remote, being remote. He's going to teach how to lock up deals over the phone completely virtually. If you work in multiple markets, this will come in handy as well. How to get sellers to execute contracts, everything completely virtually without ever seeing the house physically. Then you're going to hear from Chris Gomez. He'll be talking about similar thing, invest in virtual investing specifically. He's going to go more broad and cover all the different aspects of running a virtual real estate operation and how he does it from his own backyard in California, one of the toughest markets to do deals in. You're also going to hear from Tim Bratz. He's one of the biggest operators in our entire network and family. He's coming on today around 3:15 p.m. I'm going to talk about how to raise money during these times of adversity. And then we're going to wrap things up with Lee to tie a nice bow on all of this and give us an action plan of what to do today, this week, next month, etc. And this is a moving target, right? Things are changing all the time. So we encourage you to stay connected to us, stay connected to this community. We want you to have the insights that we're sharing amongst our community, our members. And so throughout this training today, all of the speakers have anywhere between an hour to 90 minutes, and they can only go into so much stuff, right? They can only share so much with that much time. So we do have other opportunities where you can go deeper with us or deeper with any of the trainers on here to learn more. And so while they're going to show you what they're doing and the business strategies that they're implementing themselves, we have some special opportunities for you to go deeper with us today. We're going to show you step by step how to do this stuff. By enrolling in any of these extra programs that we're going to be sharing with you and talking with you throughout the day, we'll be given huge discounts and bonuses because also we want to give back. We're in some interesting times right now, and so we want to give a break but still allow our community, those that are interested, to be able to continue their learning with us and learn these tips, ideas, and strategies on how to really capitalize and thrive during these times after you've gone through your survival mode. So be sure to talk to your team members, the team members that have been communicating with you since yesterday. Be sure to talk to them. We've got a lot of requests for Lee's class. Chris hasn't even come on yet. People are asking about his stuff. Same thing with Steven and also the abiding class with Ed and Christian. So if you're interested, text the team member and they'll be able to hook you up with more details. Now, today is the last day where you can be eligible for the contest. So if you take a picture of their screen, the recording, show people that you're on the training. If you look at our Real Advisors Instagram account, you'll see people taking all kinds of creative photos. Get creative with it. Have fun with it. But take a picture, post it on Instagram, Facebook, Twitter, wherever you are on social media. Take a picture, tag Real Advisors in your post, and also put the hashtag State of the Market. That will automatically enter you into our contest where you have one person will have the chance and opportunity to win any of the trainings that we do. We'll do a drawing later on today, so you still have a chance today to enter and win. If you posted yesterday, that's okay. You have another chance today. We're going to take all the social media accounts that did that tagged us. That's how we're going to know you did it. We're going to put it in a nice little bowl and we'll have someone draw it. We'll do it live at the end of the day, and you, the lucky winner, can have a chance to win as well. So be on the lookout for that. Again, we're going to jump right into it. Make sure you take copious notes. We have a lot to go over today. Be sure to use the chat feature a lot as well. We're going to take a lot of questions there. And on breaks, network with each other. Now, on the breaks is when you can chat with each other, build relationships. There's a lot of people in here that you can work with and build relationships with and do deals with. All right, so I don't want to take up any more time. We have a lot to go over, so we're going to jump right into it with Mr. Dave Steck. Now, Dave is one of Lee's mentors and lenders, and I wanted Lee to jump on here to introduce his good friend and colleague and associate for us. You're in for a treat today.
Absolutely. Dave, thank you, Delmar, for kicking us off today. And Dave, thanks for being on here this morning from PR. I really appreciate you jumping on. Just give you some cliff notes because I really don't want to take away from Dave's time. A couple fun facts about Dave. He has funded over $100 million, 1,000 transactions for me personally. So that's just a small fun fact. One thing I love about Dave, reminds me of my father a lot, where just started with nothing and just built an empire. And that to me is incredible. I have so much respect for people like Dave, particularly Dave. Dave had unique challenges growing up, and he may or may not talk about those, but he's just done a lot with just a mindset and a willingness to just take action. And what I really like about Dave too is that he is data driven. I'm a numbers guy too. He looks at the data and he's predicted things that were going to happen in the market. Why? Because he was looking at the numbers. This is what I love about real estate. Real estate can show you what's going to happen before it happens if you just want to pay attention. So Dave is a master at that. Harvard, spoken at Harvard many times, and his sons, actually, fun fact about one of his sons, one of the 4 founders of the largest hard money lender in the US, just another little fun fact. Not only is Dave a great dad, and I know that personally, which I highly, highly respect, he's a great granddad. And, you know, whenever we talk about our kids, he talks about his grandkids, and, you know, that to me it's important. You know, I want to deal with good people moving forward at this point in my life. And I want to deal with experts that are also good people. I don't want to choose anymore. I just want to have both. And Dave definitely checks the boxes. You guys are in for a real treat today. Dave is a wealth of knowledge. And listen to Dave. When Dave speaks, the things he said are really going to be from an intelligent point of view. And what I like about Dave and several of our speakers here, that it's not our first rodeo. We've been through this cycle before. Dave's been through a few cycles. So listen to Dave, because he can help navigate through what we're going through right now. And I understand this is a black swan event. You know, no one expected this. You know, you asked me 3 weeks ago, did I think we were going to be where we are today? Absolutely not. I was healthy. Well, when I say healthy, I'd had some issues with bronchitis, but I certainly wasn't expecting to be in a hospital room fighting for my life. So I'm just so thankful again, Dave, that you're here. Really don't want to eat into too much of your time and, you know, steal your thunder. So I'm just going to hand it right over to you. But guys, you're in for a real treat today. And again, thank you, Dave, for jumping on with us today.
Well, Lee, thanks a lot. You've been a great friend. I'll acknowledge you in a second here, but Dolmar, I guess I got to figure out whether you can see my screen or not.
We see you, not your screen. So at the bottom where it says the share button, you can see the share. Just click on that and you should be able to share your screen.
Well, I wish I did, but hold on. Maybe I need to go into Zoom.
Yeah, click on Zoom.
I apologize. I'm not.
And it's the middle green button.
Oh, you know where it is? My bad. I get it. Hold on a second.
Okay.
All right.
There we
Tell me
go.
when you see it.
So it's blurry.
Hold on.
This is where you got to be very careful, Dave. You're now sharing your screen with several hundred
know.
people.
I know, especially now that it's been videoed, right?
And live streamed on several platforms. No pressure.
Hold on. Just trying to figure out where that presentation went. It disappeared. There it is.
Awesome. There we go.
Familiar?
Yep. Looking
All right.
good.
Ah, nice.
You are live.
Sweet. All right. So we're good. You can see that, right?
Yes, I can.
All righty, great. Well, I apologize, folks. I'm technologically a dummy, but in terms of understanding volatility and opportunity, I think I can help deliver for you. So here we are at Real Advisors on April 5th, 2020. I'm talking to you from Puerto Rico, which is my home and has been for the last 6 years. It began here for tax reasons, because there's only 3 things you want to accomplish financially. It's to be able to generate a lot of cash, otherwise known as income, accumulate a lot of wealth, otherwise known as assets that both throw off income and go up in value. And the third, and what I've realized is the single most important thing, is keeping it. So here in Puerto Rico, I pay 4% corporate income tax. And on capital gains, interest income, and dividend income, I pay 0. So you can imagine that if you structure your life in a way to optimize and win the money game, you will win big time. So let's talk. First, I'm going to start by recognizing Lee. This was a photo he sent me, I guess, last month. And I want to start by recognizing him. I'm so grateful, not just for Lee, but the fact that he's healthy or healthier than he was a week ago. It makes you really nervous when someone becomes the first person that you knew, and Lee was the first person I knew that had come down with coronavirus. As Lee said, or maybe he didn't, we recently hit a major milestone in our business together, in our 9th year of doing business. We've done an awful lot of business together, as he mentioned. But he's more than just a borrower, and it's more than just doing business. It's more than making a ton of money, and by extension, making money for everyone else around us. Lee is a dear friend, and friends bring out the best in each other. You know, Lee and I are able to talk and strategize, and 1 + 1 actually equals 11. And why is that so important? Well, Lee is a fewer better. And that's really important to me because I'm at the point where I've got all the money I could ever need for the rest of my life. What I'm really looking for is an opportunity to be able to matter. So you're going to find in the course of your life, if you haven't already, that if you can thrive, that's great. But those of us who've had to survive first really put us on a new trajectory if we were committed to thriving. So I've been able to survive and thrive. And even while we're still thriving, I'm able to matter by doing things like this to help Lee. So where does that take us? Well, I don't have books or tapes or TV shows. My whys are on the right side with me. I grew up in a trailer park for the first 20% of my life. We didn't have a pot to piss in or a window to throw it out of. I ended up graduating undergrad from Purdue and later from the London School of Economics for grad school. Spent too much time in corporate America. The good news is I launched the first disposable camera for Kodak and the first digital postcard for Disney, and billions of dollars were made on those.
Dave, can I ask you to parlay into just a side story? Because I think it speaks to just your tenacity. Can you tell them the quick story about the marathon and the bet? Because I think that speaks to your character and just really the drive that you got. To me, that story is so relevant for business. Just if you can give us like 30 seconds, 60 seconds on that, I think that would be interesting for people to hear that.
Sure. When I was, and by the way, it appears that I'm dark. I tried to put some background behind me, so maybe I'm just trying to be anonymous. I don't know. Anyway, yeah, when I was living in London, I was at a dinner party, and there was a guy behind me, a British guy who was regaling everyone with his marathon stories. He'd run over 30 some marathons, blah, blah, blah. And he was telling everyone how successful he was. And I said, by the way, I just turned around, just said, by the way, how fast did you run? And he said, well, my fastest was 3 hours and 1 minute and blah, 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 and blah, blah, blah. And I said, geez, that doesn't sound very fast. And my wife said, oh, would you shut up? And of course I didn't. And he said, yeah, you Yanks all think you know everything. You Americans, blah, blah, blah. And I said, well, I don't know. I just doesn't seem that fast to me. And he said, well, why don't you run a marathon? And I said, if the incentive were great enough, I probably would. And he said, well, there's a marathon. I'm going to be running one soon. Why don't you run and we'll see who wins? And I said, well, how soon is it? He said, well, it's 13 weeks. And I said, how far is it? He said, 26.2 miles. And I said, well, if the incentive were great enough, I'd probably do it. And he said, so we made a personal bet, a dollar amount, which is going to die with me. And someone's going to open up my time capsule. My sons don't know it. Lee doesn't know it. No one knows it. But it was a lot of money for me at the time. And then I went full on for 13 weeks. Ran a 2:53:56 marathon and haven't run a step since. So it really is about being so driven and being so motivated. I mean, look, everybody on this call, I hope, is one of two things. You're motivated or you wouldn't be here. And two, you're qualified to do something about it. Whether it means money or knowledge or some combination, that's what it's all about. And I felt like I had both motivation then and qualification because he didn't know that I used to run competitively, but not as a marathoner. And I didn't know 26.2 miles. All I knew was 800 meters. So that's the story, and I'll move on.
Laser focus, guys. Laser focus. You can get anything done you want. Laser focus. That's a big point to me.
I early retired 3 times. Once I left corporate America, took 3 6-month life sabbaticals with people I love. That's really important because you're now in the form of some kind of a life sabbatical where life has changed and you need to take some time and reflect. So in my case, I spent 6 months traveling with my older son. I spent 6 months traveling with my younger son, both in the case of looking to get into college. And then I spent 6 months with my dad during the last 6 months of his journey with cancer. I made more money during that combined 18-month period than I had at any 18-month period in my life, because I have fewer betters in my life who helped. We'll talk about it. I've only been in real estate 18 years. As Lee said, I'm a freak about economics and housing market data and research, and it led me to get out in 2006 before the crash, led me to get back in 2009. And I got back in 2009 after I'd early retired because I had an opportunity to co-found a company with my sons called Purpose Built Investments. And now we've done thousands of deals, and one of my sons have done tens of thousands of deals. So Blake is my oldest. He ended up graduating from Berkeley. Josh is my youngest. He's the guy that Lee mentioned who built $1 billion company in the private lending space. And every day, including now, I'm not only grateful, but I'm not content. I want my kids to outgrow me and live a better and happier life with even greater meaning. So I want you to write that down. Grateful, but not content. That's 4 words I've lived by for the last 35 years of my life that served me so well. I'm healthy. I'm here in Puerto Rico. I've got the best wife on the planet. I got the best kids on the planet. I've got everything in the world to be grateful for. I'm just not content. I'm just not okay. It's not okay to be okay. So that's the word that keeps coming up over and over and over again. And it's almost to the point where it's so overused, it doesn't mean anything to anyone anymore. But what does it really mean? It means never done and never known before. When something is unprecedented, it means we don't know everything. And I'm the first guy to tell you here, I don't know exactly what's going to happen, but I probably have a better sense for it than you do. And that's why Lee's asked me to share. So I know you have a lot of questions. I know you're looking for a lot of answers, and I'd love nothing more than to give you all of them. All I can do is this. I could tell you everything's fine. I could tell you that everything's a cluster, and it's actually a little bit of both. And thankfully it is, because that's volatility. So what I'll do is I'll share what I believe to be true after 18 years of analyzing real estate markets and my honest take. And here's the one thing you can count on. Volatility always equals opportunity. I believe this is one of the 2 most significant fortune building opportunities in my life and yours. And why do I believe that? Well, for me, it started in 2005 over here on the right. This is when I spoke at Harvard and I told everybody to get out of the market. After sharing 700 slides worth of data and believing the market was overheated, I said, we're getting out and I'm selling everything. And of course, I didn't get invited back because I was the biggest idiot in the room. Think back to 2005. You're going to see what it looked like here in a second. I finally get invited back in 2008. Hey, Dave, you told us in 2005 to get out. How many of you in the audience got out? Nobody. Well, what are you going to do now? And I said, I'm going all in Las Vegas. Lee knows this. So I went all in Las Vegas. And of course, I was the biggest idiot on the planet because 68% of all homes were underwater, which meant 7 out of every 10 homes you drove by were either an REO or short sale or at auction. So didn't get invited back because I was a confirmed idiot at that point. And then in 2011, I got invited back and I said, what's the point? I'm wasting oxygen on you because you didn't do what I told you in 2005. You didn't do what I told you in 2008. What makes me think you're going to do anything in 2011? I know you're smart, but being smart and taking purposeful action are 2 completely different things. One is a knowledge base and the other one is a commitment to excellence. So if I had to characterize everything in terms of one word, I'd say that I'm a market timer. Why market timer? Because there's nothing. So repeat, write it down. There's nothing more important in real estate than timing. And that's true of life. There are 2 times in your real estate investing careers where you make the most amount of money by far. What are they? When you get in and when you get out. That's where I have made my fortunes. So 99% of people just don't realize it. They think real estate is all about cash flow. And I couldn't care less about cash flow. I know that's contrarian. Lee and I've had this conversation, but for me, cash flow is simply the glue that holds a deal together long enough for me to make a fortune. I'm looking for appreciation. I'm looking for the three forms of appreciation I'm sure Lee shared with you before. We'll get into that later, but the bottom line is cash flow is great and it's really important to generate income. But boy, if you can't accumulate wealth and if you can't keep it, at some point somebody is going to transfer it from you to them. So think about this. 4 weeks ago, we all thought we had enough time in our life. Have any of you in your lifetimes imagined that in America, you wouldn't be able to go into a restaurant or sit at a Starbucks or shop at the mall or take a vacation of your choosing instead of one of the imposed vacations we're taking now? None of us could have imagined we would be here. And as you look at all of this, you have to ask yourself this. Do we have ghost towns now? We had 5 photos taken on Saturday. This one is in Las Vegas. This one is in Manhattan. This one is in Washington, D.C., where we found someone. This one is in Chinatown in San Francisco on a Saturday. It should be packed. And this one is on the beaches of California. Now, shutting the country down was necessary, but who could have imagined this a month ago? That's why I say unprecedented, and that's why you see that word being used so often. The world has changed considerably. It's actually closed for business for the most part. Now, I'm not trying to be dramatic, and we're going to talk about opportunity, but there really aren't any words to express what you may be feeling. Confusion or fear. Maybe you're feeling financial strain. Our country is, but it is what it is. My family's been looking for silver linings. We're spending more time with each other, but virtually. My family is 4 households that are now living from Puerto Rico to Atlanta to Las Vegas to California. But the harsh reality is that we've only seen the beginning. The only 2 questions we ought to be asking ourselves is, for how bad and for how long? So how did we get here? I'm going to move quickly. This is a slide that I've been showing since 2000, from the beginning of 2019, predicting a recession in 2020. And I could go over each of these bullets because in a full-length presentation, I would talk about all the risk that there was in any one of these particular areas. Who could have imagined that oil prices would jump on there? We'll talk about oil prices in a minute, not that it's important necessarily to real estate advisor or real estate advisors being you, but at the end of the day, oil prices wasn't in my expectation for what might be the tipping point, nor was coronavirus. So what's the key word in all this? Uncertainty. That's where we are right now. We're in a very uncertain time. And honestly, even with all I'm going to share with you and what I know, I'm going to tell you, it's still uncertain for me. So we have this community called the Access Insiders, and it's all multi and deca millionaires who want to be like our family is. So they want to either grow from multi-millionaire status or 10 millionaire status, and they want to get to some other point. So I always tell them, research, investments, and family optimization, that's our focus. Those are our 3 pillars. We don't do anything other than that. We treat our family like a business, and those are the 3 things we do. Research drives our decision-making, and it's about to start driving yours. Investment opportunities are the vehicle for making money and accumulating wealth. And then we have to constantly improve our family to pass it on to the next generation. Many of you are so young, you're younger than my son. So I'm not trying to tell you that you've got to focus on one versus another. Here's what I'm going to tell you. Right now, and generally speaking, the most important of them all is research. Research solves for uncertainty, and it's never been more important than it is today. This is it. So leading up to this, in the last 8 years, we've been spending about $10,000 to $12,000 a month on research. We went, at the beginning of the year, we decided to increase our investment in research by 3 to 5x, and now we're doubling down again. Here are our research sources. I'm not going to go through them, but there are a lot of them. And you've got to have people to not only look at the data, but analyze the data, and I'm thankful for them. So recognition feeds the soul. just like I recognized Lee as one of the being one of the fewer betters. These are the people that help make us better investors. So any idiot could have made money in real estate in the last 8 years, but the next 8 are going to be a lot different, and it's starting soon. Who's that quote from? Who said that? That would be me. I did it during a presentation that I gave to our Access Insiders in 2019. These are smart people who are open to listening to a contrarian. Who could have imagined we'd be here? And why do I believe that you've got to be a contrarian? I know Lee is. And why do you have to be a contrarian? Well, think about it this way. If you were to look at Social Security statistics for people who reach the age of 65, out of 100% of people who reach the age of 65, 38% never do. They die. 53% die dead broke. So that's 91% of people. So here's an idea. Don't do what they did. Figure out what the other 9% did. And of that 9%, roughly 5% are independently secure, roughly 3% are independently wealthy, and I shouldn't say wealthy, but they're independent. They don't require Social Security or pension or a job, and only 1% are rich. Think of that. 1 out of every 100 people achieve at least multimillionaire status, and 4% of people become millionaires. So I want you to be there, and if you're already there, I want you to just add a 0. Well, I forecasted a recession in 2020, but I certainly didn't think it was going to be this bad or this fast. And that's why Lee asked me to share what I'm going to share. So let's start with, what did I think about the 2020 housing market before coronavirus? Well, for me, it's no surprise to any of you that the stock market has been on a tear for 11 years, real estate for 8 years. And in fact, real estate actually bottomed out in January of 2012. So where are we today? We are in March, rephrase that, April of 2020. So we're 8 1/4 year into this boom. And in 2012, we had just ended a spectacular 5-year race to the bottom. If you were to look at a housing map across the United States, in 2005, on an inflation adjusted basis, and look over here at the index, you can see that there are some markets that are growing more than 18% per year, some 15 to 18, 12 to 15. In other words, if you're in the orange to the yellow and green, you're a pretty good market. If you're in the blue-ish, you're not in too good a market. And if you're in the purple and pink, you're not in a good market at all because it's in decline. In 2005, at the peak of the market in terms of unit sales, not even price didn't peak until 2007. But in terms of unit sales, you can see that there are always 4 states that lead the pack when it comes to any comeback: California, Nevada, Arizona, and Florida. That's it. That's where we invest. That's where we've made fortunes. Because in those states, they fall the fastest and they come back the fastest. So look at 2005. Fast forward to 2012. Look how bad that market imploded. So everyone was in a negative state. So here's the good news. Markets come back. And some, in the case of price, come back with a vengeance. Some people get rich. And the question is, where are we today? Well, in order to answer where we are today in 2020, we got to think about what I just shared with you. Where were we in 2012, and where did we get to 1 month before this whole thing started unraveling? Again, 2012, we were here. 2014, in 2 years, look how we bounced back in those volatile states. Bang, 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 down here. The East Coast took forever to come back. The Midwest took forever to come back. And it arguably will never come back to the point where some of these other states will. But where are we today in 2019? We're right about here, right? We're in the midpoint. We're not doing much of anything. And in some markets, you can see that they're already correcting significantly. That was before COVID. We were already at a tipping point. And so here we were. Now, where are we heading? Well, for me, the best place for you to understand the single most important word in real estate in terms of timing is trying to figure out the when. If you can get the when right, you can win. If you get the where right and the when right, you make a fortune. Lee and I have had that opportunity to do so together. So he talked about funding over $100 million worth of deals. Imagine how much money was made on that by him and by me. And here's a perfect example. If you look at Las Vegas in 2002, when I got into real estate, the median price was 147. Fast forward to 2007 when it peaked at 287,000. All of a sudden, within 5 years, less than 5 years, it dropped to $100,000 or 65%. And in December of 2008, there's no point in updating it further because all it did was grow more. It grew 160%. So if you want to make a fortune, figure out when, figure out where, and then I'll talk about the other three things that are important, but they're actually not as important as the when and the where. Because in any market cycle, there are three things you should care about: where we are now, where we're heading, and when. So let's start with those expectations now before COVID-19. I'm not going to get into a lot of this, but let me just say, in 2020, I believe we had reached a tipping point, but unit sales were still strong. And we're tracking 405 markets, what are called MSAs, Metropolitan Statistical Areas, and we're trying to identify the best areas to be in. Well, why were those markets so strong from a unit standpoint? Because mortgages were at a low point. If you looked at 30-year fixed rate mortgages or any other benchmark, you'd find that they were at the bottom. Therefore, mortgage applications were rising. People found it more affordable. The affordability index is something that we've used to be able to figure out back in 2005 that the market was going to crash, and in the previous two cycles in 79-80 and 89-90. It turned out that new home sales were really booming. And if you stop and think about what's happening now in new home, what you'd find is that moving forward, new home sales will not be as impacted as existing homes, because for the foreseeable future, people are spooked on existing homes as compared to new homes. I'm not saying it's right, and I'm also